Good afternoon, everybody. Today's date is 1/30/2019. One more day left, and January of 19 will be over. And basically, what I'm going to bring to your attention so that you know what to expect is this is a daily chart, and we had a bear market October, November, December of 2018. 3 months in a row, we went straight down. We have a 1 month counter trend. Basically, it's a 3-to-1 ratio based on the counter trend within a bear that has started. That bear is not going to go away. The rising 10-day simple moving average is the blue line, and that's at 26.46. And it's been rising as we've been going along with this trend. And we are no longer technically or mathematically in that bear market trend on the S&P anymore. There are a couple of things that are disturbing. That orange line is a 100-day simple moving average at 27.14. It crossed over back over here when we went into the bear. It crossed over that green line. That's a 200-day simple moving average. That wall of resistance is going to be coming right up here. And there's that trend line right below that 100-day simple moving average. The other thing too is that in the short term, we're going to become overbought. Right now, we're working in that zone of being overbought. We were deeply in the bear signal down here in these MACD bars. We came up, we popped a buy signal in January. Quarterly earnings have been pumping, and they've been gapping up the markets to the extreme of where you need to be careful. And I'm going to show a weekly chart to this, and this is the S&P 500. It is no longer in bear territory, and it's coming out of that as we speak. I'm going to be showing the S&P 500 weekly chart, and it's going to be like this. And we're not in a bear market at this time as we were. And I can only stress to you enough that this is a counter trend to the 3 months that we went straight down in 2018. So what I want you to see right here is this is where the bottom started in the bear market. That was a 200-week moving average. We all know that. And then we've gone up 4 weeks on the S&P. And we are no longer below the 100-week moving average at 26.24. That's going to act as support. The blue line, that is a 10-week moving average at 26.04. The red line that you see up there, that is a 20-week moving average. And we hit right there. That is going to be resistance. The earnings season is what's been creating the gaps for the bull. We still remain in a weekly sell signal. It's not as deep as it was, but it's something you better be aware of. And I am saying that 2019 volatility will be bigger this year than any year that you remember. And you're going to go through it. If you're serious about these markets and you want to get what's going on, call 702-665-0772. Once again, that's the weekly chart on that S&P 500, and we have a wall of resistance. There's the 20-week, that 50-week up there. Well, that 50-week moving average at 27.29, and the 40-week, the blue line's right above it, and that is at 27.42. So we're going to deal with this 20-week moving average tomorrow, and the next few days of trading. You could see the wick. It got right up here below it. And you could see how it slid that wick on that weekly bar. And yes, today is Wednesday. We have Thursday and Friday. And I will tell you one thing. Technically, from the new year of January of 19, we're not in that bear at the very moment. However, we do have a bear weekly sell signal that is still here, and you can see it. These are the blue lines that are going up in value. And so the wall of resistance will remain up there. Earnings season has been extraordinary, and these are things that you need to be aware of.